Hello, YouTube. It has been an incredible start to 2023. And the question now is whether or not this head and shoulders neckline here at roughly 300 is going to lead us to the promised land or going back up to highs, or if we're going to fizzle and get a bust where we actually put in a new low. We have a higher high on the monthly, but we're not above it, which means we do technically have a failed breakout. We are in a head and shoulders pattern, and we are right up against resistance. But this is the best January since 2001. It's also the biggest monthly advance since July of 2022. So if we understand where we came from versus where we're likely going to go, remembering that this is now the third time that we're going to be making a run at about 410 on the S&P. Is this going to be the start of a bull market, or is it just another bear market bounce? What happened today as well, to understand the reason why we went higher, is that the ECI, Employment Cost Index, came in, and it pretty much cements a 25 basis point hike from the Fed. Here's an article from Bloomberg. Take it with a grain of salt. The headline is meant to catch your attention. Federal Reserve might need a new excuse to stay hawkish. The central bank has zeroed in on ridiculously specific metrics to justify its rate increases. Even that is showing signs of improvement. Here they're talking about the ECI as well, where we're back at a level we've not seen since early 2022. With fear and greed solidly into green now, we got a 70 handle. Are the bulls getting a little bit too euphoric as we are right around resistance? And what's so important for us to keep in mind is that normally I keep this for a private group, but I want to show you that there is a lot on the docket this week. The further we go down the week, the more important decisions come. We reviewed a lot of this on the weekend as well. Pause the slide if you want to read it. So now we're going to shift gears here, and we're actually going to pick up where we left off yesterday to better understand not just where the NASDAQ is, but also where the broader market is. So now we're going to go here to our two boards, and we're going to note that we're now back above the 200 daily here on QQQ for one day. So was this a trap? I'm not sure. We look to our weekly chart. We bounced right off my pivot or the white line. We have an inside bar. We are currently down by about 0.5% on the week. But I think that with today's price action up by 1.5%, people kind of forgot that we were actually even red. The S&P 500 is basically flat on the week here. What's so interesting is that we actually have a bullish engulfing daily candle, and we had a huge dump overnight. So what's so interesting about this is that this is only going to show up on the E-mini futures. If we look here to the S&P 500, our low of the day is 400.77. This is really interesting because as we look here to our weekly chart on the S&P, our low established yesterday, 400.23. We look to our low established the last time we had a correction, 387.2. So they love that 0.1 to 0.2 area. That led to a punch up last time. Is the same going to happen here? Well, we're up by 80 cents or 0.2% on the week. I don't think it feels like that, though. I think a lot of euphoria is actually building in. And if we now look here to our daily chart, what I've been trying to point out for the last, about a week or two was this cup with the handle and whether or not it's actually going to pass. So what's so interesting here is that we don't actually have a test of the uptrend. If we zoom in nice and close for those boomer eyes, we note that we don't quite have a test here, but on the E-mini futures, we do actually get a test on our uptrend. So from wick to wick to wick to wick, we actually got our bounce. And the reason why this is so interesting, and notably on the S&P 500 E-mini futures, is because if you look at what happened to the 50 moving average here, we dove down below in pre-market. We look here to our chart, note the 430 area. I have it noted right here with a red line. So we dive down and then right into that ECI number, we power up over it and we get a dip, but we only come down to 4033, which means that we're actually just back testing our 50 weekly moving average and then advancing. This is important because the E-mini futures moving averages will be lower, which means that we were already below the S&P 500 50 MA. And then ES actually got held. We put in higher highs, higher lows, and we punched it into the close. So there is going to be a lot of spicy activity going into tomorrow with Jerome Powell. And if you're interested in joining us for a free trial, you can come trade with me, Justin from YouTube, where we're going to be streaming all the way through Jerome Powell from roughly 2 o'clock until about 3:30. If not, I really encourage you to watch the weekend video, which should now be queued up. And I wish you all the best of luck into tomorrow. Thank you.